FinanceStrategy.com.
Hello, this is Daniel Grady with a quick look at the markets for today, Friday, April 11th. We'll start with a look at the economic calendar, and the day starts really early at 6 o'clock GMT, just a few minutes ago, when we had a consumer price index from Germany. This is a key component. However, the result was pretty much as in line with market expectations, so we didn't have any major fluctuation in the euro. After that, at 12:30 GMT, we have producers' price index data from the United States, so it's not expected to generate all that much volatility unless there's a major miss here with the data. And then at 1:55 GMT, we have the University of Michigan Consumer Confidence Survey, and as you know, the consumer is a major component of the American economy, so anything here that comes out unexpected could generate some significant volatility in the dollar and in American stocks. Moving over to the markets, the S&P 500 yesterday had a significant drop and pushed clearly below 1,850. This was mostly led by tech stocks, and we had a significant drop in NASDAQ yesterday. The NASDAQ is a very tech stock heavy. It had the largest drop it's had since 2011. So clearly the investors are not all that happy. There was some analysts that pointed out that most of this was due to concerns about valuations of tech stocks. That means the amount of money that tech stocks are giving in dividends is not justifying their significantly higher price. So there might be a move on the downside for tech stocks. In the short term, a strong move on the downside like this could prompt some short coverings and a short rebound during today going into the weekend. This move was reflected during the Asian session, with Asian stocks moving on the downside, again led by tech stocks. The exception being here China, with Chinese stocks, particularly Hang Seng, performing admirably during this week. They has the best performance in the region compared to Japanese stocks, which have the worst performance of the region and are down almost 7% over the last couple of weeks. And going into the session today, aside from the expectation of potential short covering, the S&P 500 is trading up. S&P 500 futures are trading up by 0.1%, which is pretty much neutral to slightly upside bias. Going over to the euro the euro yesterday continued to move higher. It came up to our resistance level here at 139, and is currently trading just a hair below that. If 139 doesn't hold, and it's a pretty weak resistance level, we have our next level of resistance at 139.40, which is significantly stronger. And on the downside, we have 138.40, so we have a pretty broad range here, without any major news coming out from from Europe during the rest of the session. Similar situation we have here with the pound, with no major news coming out from the United Kingdom. So any movement in the pound here is going to be dollar driven, as we'll be looking at around 2 o'clock GMT to see what happens in consumer confidence, which might have some effect on the dollar. As we expected yesterday, the pound entered a little bit of a correction here around 168. On the upside, we have 168.30 as our next level of resistance, and on the downside, we have 167.50 as support. The yen yesterday also continued to try to go lower, which would bring it closer to 101.30, which is our strong support level here at the moment. And then it moved back higher during later trading, and during early trading today, the yen has virtually recovered all of its losses from yesterday. So we still have support at 101.30 and resistance at 102.30, without any major data coming out to affect the yen. And finally, we have gold. Gold continued to move higher with an interest in safe haven assets, particularly after the strong drop that we had in tech stocks and in other equities. So we were above our previous resistance, which is now turned into support at 1,310, and then we have resistance at 1,340. So there'll be our range for 1,310 to 1,340, our expected range for trading today. And that's it for today. Thanks for watching and happy trading.